I'm Eddie Adkins. Welcome to my video, a quick summary of the Earned Income Tax Credit for 2020. Before we jump in, I'll tell you just a little bit about myself. I'm a certified public accountant, and I spent over 25 years as a tax partner in two major accounting firms in Washington, D.C. I'm retired now, and one of the things I'm doing in retirement is making videos to help people, hopefully people like you, understand tax issues. And I'm joined in this video by my little adorable rescue dog, Hazel Pearl. I'm guessing she's going to sleep through the video, but we'll see. No, she's off somewhere. She's not interested in the video, but she may be back. In this video, we're going to talk about three things: how tax credits work, requirements to claim the Earned Income Credit, and the amount of the Earned Income Credit. Now, I'm calling this a quick summary. It's about as quick as it can be and really do justice to the topic. And in particular, I felt it was really important to talk about the amount of your Earned Income Credit, although that does take some time, because I know that's really important to you. How much is the credit? If you do want to skip ahead to certain topics, I have put links in the description of this video so that if you want, you can skip to other parts of the video rather than watching it all the way through. Now, if you do want more information after watching this video, I just wanted to let you know that I have prepared two additional videos on this topic. The first one I call my overview of the Earned Income Tax Credit for 2020, and it provides more details regarding some of the requirements to qualify for the Earned Income Credit, and also some more details regarding how you determine the amount of the Earned Income Credit. Otherwise, it's really not that much different from this video. I've also prepared a video that I call a thorough discussion of the Earned Income Tax Credit for 2020. Now, this video is quite lengthy. It's actually a little over 2 hours long, but it really helps you make sure that you've dotted all your I's and you've crossed all your T's. And it provides more details regarding all of the requirements to qualify for the Earned Income Credit. It discusses how you fill out your tax return to claim the credit. It addresses special situations that arise in applying the rules, and it provides a lot of examples to help you understand how the rules actually apply. And it does have links to skip ahead to specific topics, so you don't necessarily have to listen to the whole thing. Let's jump right in now with how tax credits work. So if you're going to get the Earned Income Tax Credit, what does that mean? How is that beneficial to you? And the best way to explain that is through examples. So I have two examples for you. In the first example, let's say that the taxes on your income are $2,500. So you've finished your return, you've added up all your income, taken your deductions, you've gone to the IRS tax tables, and it tells you that your taxes are $2,500. But you've had $3,000 in taxes withheld by your employer. So that means the IRS owes you $500. You've overpaid by $500. Let's assume now that you've determined that you're eligible for the Earned Income Credit, and you've determined that the amount of your Earned Income Credit is $1,000. That means the IRS is going to send you a check not for just $500, but for $1,500. So hopefully you can see how that Earned Income Credit really benefits you. Let's do one more example. In this example, the taxes on your income are zero, and that's because you don't make enough money to have an income tax liability. Perhaps you don't even make enough money to need to file a return. But let's say that you determine you're eligible for the Earned Income Credit, and I'll use the same amount as the prior example. The amount is $1,000. Well, the IRS is going to send you a check for $1,000. Even though you didn't actually have any tax liability, you still get the Earned Income Credit. But here's a really, really, really important point. I can't overemphasize this enough. You don't get the Earned Income Credit automatically. You have to file an income tax return to get it. So make sure you do that. Don't leave that money on the table. Make sure you file and claim the Earned Income Credit, of course assuming you qualify for it, and we're going to be getting into that very shortly. Now, I've used $1,000 in my example, but for the year 2020, the Earned Income Credit can be as high as $6,660. That's a lot of money. That's a lot of value. Now, later on in the video, you will have the opportunity to get a good idea of the amount of your earned income credit. Not everyone gets $6,660. Let's jump in now to the requirements. So to get this great benefit, the earned income credit, what requirements do you have to meet? The first one is that in order to get the credit, you must have earned income. And that in fact is why it's called the earned income credit, due to that requirement. So what is earned income? Well, earned income is money you have to work for to get. So it's things like wages, salary, tips. If you're self-employed, it's your self-employment income. Most people do have earned income, so this requirement is fairly easy to meet. Now, it's not money for work you did in the past. So if you're getting retirement income, if you're getting Social Security benefits, if you're taking money out of retirement accounts like a 401k, that's not considered earned income for the earned income credit, and that will not meet the requirement to have earned income. It's also not unemployment compensation or workman's compensation. So now you have an idea of what earned income is and whether you've met this requirement. I want to make an important point. If you're married filing jointly, only one of you has to have earned income. It's not required that both of you have earned income. That's certainly fine, but only one of you needs to have earned income. So that's really good news for married couples. Here are the additional requirements that you have to meet. Let me walk you through those one by one. You cannot file a return as married filing separately. That's a pretty straightforward requirement. Next, your investment income, so things like interest and dividends, cannot exceed $3,650. Next, you and your spouse, if you're married filing jointly, must be a U.S. citizen or resident alien all year long. Next, you, and again, your spouse, if you're married filing jointly, must have a Social Security number. Next, you cannot file Form 2555, which is a form that deals with foreign earned income. Most people don't have foreign earned income, so this requirement is not a big deal at all. There are a few additional requirements that don't apply to everyone. They apply only to certain individuals. I'm going to hold off and not cover those yet because I think it's going to make more sense later on to cover those. So just stay tuned. I'll get to those in just a bit. Now we're ready to talk about what I think is probably your favorite topic, which is the amount of your earned income credit. So far, if you've met all the requirements, stay tuned. Now we're going to get into a discussion of how much is your earned income credit. Now, before I can get into the numbers, I need to tell you that a major factor in determining the amount of your earned income credit is how many qualifying children you have. You probably have no idea what qualifying children means, so now I'm going to tell you what that means. So here is the definition of a qualifying child. I will walk you through this. As I do, think about whether you have any qualifying children, and if so, how many, because that's going to be very important just a little later on in this video in determining the amount of your earned income credit. So the first requirement to be a qualifying child is that the individual must be related to you in a certain way. And as you can see here, there are two categories. The first category is your child, adopted child, stepchild, foster child, or any of their descendants, meaning individuals like your grandchildren and your great-grandchildren. The second category is your brother, sister, half-brother, half-sister, stepbrother, stepsister, or any of their descendants, meaning people like your niece, your nephew, your grandniece, your grandnephew. So those are the relatives that can be a qualifying child. Any other type of relative does not meet the requirement to be a qualifying child. Next, they have to meet certain age requirements, and that means that they have to be under the age of 19 as of December 31, 2020. But if they're a full-time student, they just need to be under the age of 24 as of December 31, 2020. A full-time student is defined as an individual who is a full-time student for any part of 5 months during the year, and full-time is as defined by their school. In addition to those specific age requirements, they must be younger than you. Now, if you're married filing jointly, they just need to be younger than one of you. They don't have to be younger than both of you. If it's your child, that's an easy requirement to meet. But if it's a brother or sister, you could have a brother or sister who is older than both you and your spouse, in which case they could not be a qualifying child. Now, importantly for some people, if the individual is disabled, so if your child, your brother, sister, etc., are disabled, then there are no age requirements at all. They could be 80 years old and that would be fine. Next, they must live with you for more than half the year in the United States. Now, there is no support test, and by that I mean it doesn't matter whether you paid for the living expenses. So someone else could be actually paying the living expenses, but if they live with you for more than half the year, then they are your qualifying child for the Earned Income Tax Credit. There's also an important exception for temporary absences. So for example, if you have a child who usually lives with you, but let's say they're away at college, living away from home to go to college, you get to count the time that they're away at college as having actually lived with you, even though they're really not. So that really helps you meet the requirement that they live with you for more than half the year. And finally, the individual must have a Social Security number. So now just think about whether you have any qualifying children, and if you do, how many, so that later when I get to numbers and showing you numbers, you can determine the amount of your Earned Income Credit. Now I'm ready to talk about some additional requirements to claim the Earned Income Credit that are for only certain people, and specifically for people who don't have any qualifying children. If you have one or more qualifying children, you should ignore what I'm about to say because it doesn't apply to you. So the first requirement that applies to individuals with no qualifying children is you and your spouse, if you're married filing jointly, must live in the United States for more than half the year. Now that requirement actually does apply to people with qualifying children. It's built into the qualifying children rules. But if you don't have any qualifying children, then it's stated as an explicit rule so that you're also subject to that requirement. In addition, you have to be at least 25 but under 65 as of December 31, 2020. Now, if you're married filing jointly, only one spouse needs to meet that age requirement. So the other spouse, it's okay if you don't meet that age requirement. And then finally, you, and again, your spouse, if married filing jointly, can't be counted as a dependent by someone else on their tax return. So those are the requirements that apply. Again, I want to emphasize if you have no qualifying children. Now, we're about ready to jump in to actually showing you numbers where you can determine, or at least approximate, the amount of your Earned Income Credit. And here's the approach I'm going to take to that. I put together some tables that show credit amounts. The numbers in my table come from the IRS table. So the IRS has this table, it's actually 9 pages long, that for various income levels shows the amount of the Earned Income Tax Credit. You'll find that table in the instructions for Form 1040, which is the U.S. Individual Income Tax Return. It would not be possible in a video to go through all 9 pages of that table. It's literally thousands upon thousands of numbers. So what I've done is prepared shorter tables using those numbers from the IRS table that will give you at least an approximation of your Earned Income Credit amount. And all you have to do when I show you the tables is find a number that's as close as possible to your earned income, and then you'll be able to see the amount of your Earned Income Credit. So it's really as simple as that. Before I jump into the tables, and I know everyone wants to see those tables as soon as possible, there are some key things I need to point out to make sure that you look up your number correctly in the table. The first one is that we have a very special rule for 2020. It's applicable only to 2020. This is not the normal rule. It's a special rule enacted by Congress because they realized that due to the coronavirus, many people have had a drop in earned income between 2019 and 2020. Maybe they got laid off from their job, maybe their hours were reduced, so their income has gone down in 2020. So they created this special rule that says if your 2020 earned income is lower than your 2019 earned income, then you can elect to use your 2019 earned income, in other words, the higher earned income, to determine the amount of your 2020 Earned Income Credit. And they created that rule because they didn't want the drop in earned income between 2019 and 2020 to result in people getting a lower Earned Income Credit for 2020. So it's a very nice rule. But a little caution here, for people at lower income levels, making that election to use your 2019 earned income helps. It will get you a larger credit for 2020. But for people at higher income levels, that election actually will hurt. It will result in a lower earned income credit for 2020. So what you have to do in the tables, both in my tables I'm about to show you, as well as the IRS's much longer tables, you need to look at both your 2020 earned income and see what the earned income credit is in the table, and then your 2019 earned income and see what your earned income credit is in the table, and then just choose the higher of the two amounts. It's really as simple as that. But that's a very important election you have, very special rule for 2020. So keep that in mind as we look at the tables. Next, I need to tell you that there are going to be separate tables in my tables depending on your tax return filing status. So everyone, when they file a return, has to check a box as to their filing status. And for the earned income credit, we divide those statuses into two categories. First, married filing jointly. And remember, if you're married filing separately, you can't claim the earned income credit. So that's the first category. The second category, we lump together single head of household, qualifying widow or widower. And the IRS makes that same distinction in their tables. One more thing I need to tell you, I promise this is the last thing before we look at the tables, is that the rules require you to use what's called your adjusted gross income to look up your credit in the table if your adjusted gross income is higher than your earned income. So typically you use your earned income to look up the credit amount in the table. Now, adjusted gross income is earned income plus certain taxable amounts like investment income, and then you subtract certain deductible amounts like self-employment taxes. In my two other videos I mentioned earlier, I do go into more detail about adjusted gross income. Now, it gets complicated because this rule that you may have to use your adjusted gross income to look up the amount of your credit in the table applies at only higher levels of income, and the level of income at which it applies depends on your filing status and the number of qualifying children. And it's just way too complicated for me to get into in this video. I do get into it in depth in my thorough discussion video. So if you want more information, you can go there. I can just tell you though that your earned income and adjusted gross income may be exactly the same, or maybe there's not that much difference in the two amounts. So you're probably, generally, most of you are going to be okay just to look up your earned income in the tables that I'm about to show you. So without further ado, let's get into the tables. We're going to start with married filing jointly. So the way you use the table is really pretty simple. Down the left, there are varying degrees of earned income. So find a number that's as close to your earned income as you can get. And this would be, of course, the combined earned income of both spouses. And then go across, and as you can see, the amount of your credit depends on how many qualifying children you have. So it's not an easy formula. That's why we have to have these tables. That's why the IRS has a table. So let's take, for example, a married couple with combined earned income of $20,000, and let's say they have 3 or more qualifying children. Once you get to 3 qualifying children, it doesn't matter how many more you have for purposes of the earned income credit. So in that example, $20,000 of income, 3 or more qualifying children, their credit is $6,660. I hope some of you are looking up numbers here and getting pretty excited about how much the earned income credit can be. Some of you may be a little disappointed, especially if you have no qualifying children. The credit's pretty low. It really is much, much higher for people with qualifying children. Now, if you're not seeing a number here that applies to you because your earned income is higher, no fears. We now go to the next table where I increase the amounts, and we're still on married filing jointly. Now here you see some numbers that are highlighted. Let me explain what those mean. At those specific numbers, you make too much money and you cannot claim the earned income credit. When I say you make too much money, I don't mean that you make too much money. I don't mean that literally. I mean you make too much money for purposes of the earned income credit, and it's high enough that it essentially disqualifies you from getting any earned income credit. So an example of that would be that if you're married filing jointly and you have no qualifying children, If you make $21,710 or more, then you're not going to get an earned income credit. That's why for any income levels above that, as you see in the table, the earned income credit is 0. And it works the same way whether you have one qualifying child, 2, or 3 or more. It's just that the more qualifying children you have, the higher the income you can have and still be able to claim the credit. So as another example, let's say you have 2 qualifying children. As you see, if your income is $53,330 or more, then you make too much money for the earned income credit and you don't get any credit. So those are the tables for married filing jointly. Now let's move to single. And these tables apply if you're filing a single head of household or qualifying widow or widower. They're all lumped together. Doesn't matter which of those filing statuses you have. So let's do an example. Let's say that your income is $10,000 and you have one qualifying child. Your earned income credit for 2020 will be $3,409. And you're going to see highlighted numbers again, indicating, for example, that if you're single, you have no qualifying children, and your income is $15,820 or higher, then you will not get an earned income credit. You make too much money for purposes of the earned income credit. Now moving on to higher levels of income for single individuals, you can see the numbers here. You can find a number that's hopefully close to your income, and then based on your number of qualifying children, find the amount of your earned income credit. Now the IRS tables have many, many, many levels of income listed, actually in $50 increments. So that will show you exactly what your earned income credit will be. But these tables hopefully give you a pretty good idea. And here again, I've highlighted the income levels at which you make too much money for the earned income credit and you don't get a credit. So with that, wow, we have covered it. We've covered how tax credits work, requirements to claim the earned income credit, and the amount of the earned income credit. I want to make you aware that if you do want to learn more, do consider my video that I call a thorough discussion of the earned income tax credit for 2020. As I said, it is over 2 hours long, but if you have unanswered questions, consider going to that. It does have links in the description section of that video to let you skip ahead to certain topics. Also, I want to make you aware that the IRS has a publication, Publication 596, on the earned income credit that goes into all the details. That is their main publication on the earned income credit. I will put a link in the description section for this video that will take you directly to that publication. And finally, I want to make you aware of a wonderful tool the IRS has called their online Earned Income Tax Credit Assistant. I will put the link for that also into the description section for this video. That's a wonderful tool that step by step will take you through whether you qualify for the earned income credit. It will help you figure out if you have qualifying children. It will even help you figure out your tax filing status. So it is a really, really great resource. With that, I want to thank you so much for watching this video. I hope you feel like you learned at least a little something. I so appreciate it. Take care.